This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, across Bloomberg platforms, I'm Carol Massar along with Tim Stenovec, live here at Bloomberg headquarters in New York City. We do see a slide in stocks overall, those Mag 7 definitely weighing on the trade overall. But we also have some, once again, trade worries. U.S., China, now software. So all of this weighing on the equity play today. Yeah, gold continuing its retreat as well. We're going to have some details from Alexis Christoforous in just a minute. But suffice it to say, the NASDAQ composite sliding 1.7% right now. The S&P 500, Carol, down a full percentage point. Yeah, bouncing around our lows of the session. All right, folks, ahead this hour, we are all in on the tech economy. Everything from Netflix's disappointment and Meta's AI job cuts to Anthropic and Google's reported talks on a mega cloud deal. Tesla's earnings tonight. We've left out a couple stories. As we said, it's a tech deep dive coming your way in a moment. On tech, we're going to be joined by Ty Brady. He's chief technologist at Amazon Robotics. He is back to talk to us all about the jobs of the future and who or what is going to get them. Can't wait to check in with him once again. And then, as U.S. earnings point to best corporate results in about 4 years, we are reminded that the broader economy is doing okay. On that, we get a view from the founder and CEO of the luxury hospitality company, Montage International, see what they are seeing when it comes to their customers. So we're going to get to that all over the next 60 minutes. First up, though, a check of the day's trade and top business stories. Here she is, Alexis Christoforous, in for Charlie Pellet. Hey, Alexis.
Hey, we'll start with the good news first. Stocks are off their worst levels of the day, but still under pressure now on concerns that there may be some more restrictions regarding software with China and the U.S. This is all according to a report from Reuters. The Dow Jones Industrial Average is down 377 points. This is after yesterday's record run when the Dow briefly passed 47,000. The S&P 500 down 61. The NASDAQ composite now sliding 365 points. And gold adding to yesterday's 5% loss, down another 1.3% today, moving closer to $4,000 an ounce. Netflix says a tax dispute in Brazil took a bite out of its margins last quarter, but the rest of its results were pretty good. That's thanks to some big performers like Happy Gilmore, the series Wednesday, and its most popular movie ever, K-pop Demon Hunters. We've got shares of Netflix now down 10%. By the way, the stock has tripled in the past 2 years. It hit a record back in June. And the National Hockey League has struck multi-year deals with Kalshi and Polymarket, becoming the first major American sports league to ink a deal with the prediction market platforms. The startups now have the right to use NHL logos and trademarks on their platforms and will benefit from prominent on-screen exposure during those national broadcasts. To recap, stocks lower across the board with the Dow off 382 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. It's a busy, busy Wednesday. All right, Alexis, thank you so much. So we're going to start with some of the stories coming out of the tech world. I mean, every day there's a lot, but it felt like there was a big dump today. And we're going to get into some stories that are among the most read on the Bloomberg terminal. Everything from a Bloomberg exclusive on talks between Anthropic and Google on a mega cloud deal. Tim, we've got Netflix's quarterly disappointment. We've got Tesla earnings tonight. Then we had a headline that crossed, about an hour ago? Yeah, that the Trump administration is considering broad restrictions of exports to China made with U.S. software. This one coming from Reuters. With our tech roundup, Bloomberg tech co-host Ed Ludlow. He joins us from our San Francisco bureau. Ed, as Carol mentioned on that list of things, we have a lot to get to with you. First up, I do want to start with that headline that crossed just before the 1 p.m. hour here on the West Coast. The Trump administration considering broad restrictions of exports to China made with U.S. software. This coming from Reuters. Is this another possible hurdle for U.S. tech companies?
A hurdle, but it's a playbook we're familiar with because the administration and prior administrations actually have used the mechanism of export controls on specific pieces of software against Russia, which was in the context of response to the war in Ukraine, right? So that mechanism and how companies, American technology companies, might have to respond to it, there is a case study to look at. And you'll also remember that in the earlier days of the back and forth on semiconductors in the context of export controls, both sides looked at software that's used to design semiconductors. And cutting each other off from that. So as a domain for conflict, as economic adversaries, it's not that new, but the step by the White House for sure interesting.
Yeah, and just kind of keeps, it's the back and forth between U.S. and China. We know that, right? So we'll have to wait and see. It sounds like, again, a first shot, and there will probably be more as these talks continue. All right, let's get to Anthropic and Google. This was a story that broke late yesterday. Your story, an exclusive. Rachel Metz, you and Davey Alba. What did you guys find out?
So early talks about a specific arrangement for cloud computing capacity between Google Cloud and Anthropic. The cloud part's important because Google, the company, is already an investor in Anthropic. Anthropic is an AI lab, a frontier model maker that desperately needs capacity. But what one source told me is that at the center of this is Google's TPUs, tensor processing units, its custom AI chips. And so on paper, this would present a big deal where Google sells workload capacity, computing for AI, to a really major player that also is already very closely aligned to Amazon. And you would have noticed the direction of both stocks of those two companies. Alphabet went up, Amazon went down when we broke it. And that's the dynamic here.
Is there something to be said at all about Google's Gemini versus Anthropic's Claude, and the way these two companies are partners, and Google's an investor in Anthropic, but also working on its own LLM? Just kind of help us understand that.
So if you'll allow me, there is a lot we don't know about this deal. Like, is this Google Cloud or Google making an investment in Anthropic in cash? Is it Anthropic buying tens of billions of dollars of compute capacity? They don't have tens of billions of dollars, so I don't know. The reason I point that out is that Google is a many-tentacled beast. So you have Google, which encompasses like DeepMind and all of the AI work they're doing. And every time new capacity comes online, teams within Google say, I want that. Give me the capacity for the AI projects I'm working on. But for Google Cloud or GCP, their job is to sell cloud services to the outside world. And so when they get new capacity, they're like, well, hold on, we want to sell this. And therein lies the tension. It's why the TPU bit is so interesting, because we've been trying to find out for quite a long time, beyond Google in-house, who's going to be using the TPU as the underlying technology for training or inference of AI models?
This story, a great exclusive by you guys, but it also, like you said, there's still some details we don't know, and there's questions to be asked. But it does feel like there are some really key players in this space. We know who they are. You guys report them out nonstop, that are just racing to make sure that they are not missing out on however AI ends up settling in our society. But it feels increasingly at every day, again, these are strange relationships. We talk about circular financing so much that it does feel like there's got to be some fallout at some point. People are just throwing so much money, so much attention, so much time, or maybe not.
Yeah, I mean, the idea around circular financing would be pushed back by those companies or debunked by those companies, because they'll say, whoever we give money to, there is absolutely no contractual requirement that you use our technology. We'll give you money, but you can use anyone's technology. That's part one. Part two is we start from a place where you have to accept that the industry is supply constrained. In other words, the demand for computing capacity for AI models, be that to train new models or new generation models, or just to run the ones that already exist, there isn't enough capacity. And the problem right now, and where the newsroom here at Bloomberg is starting to look more broadly, is there isn't enough concrete or skilled labor or power to build any of these data centers anyway. So, we've got a real problem here. But if you accept that starting point, all of these like constant deluge of headlines on deals for compute are easier to understand.
Which is the biggest restraint? We spent a lot of time on our editorial call today talking about power and the question about power, and the idea that, hey, there might not be enough power within our lifetimes to actually provide electricity to what these companies want to do.
Yeah, simply put, the utilities or the grid cannot supply the electricity to those data center projects that are only on paper currently. They're not yet built. The utilities cannot get the electricity because the power generation industry isn't generating electricity at that scale. And it's why we're talking about all of these future deals for nuclear power and alternative sources of energy, and why the United States right now is very fixated on the speed at which China brings new sources of electricity online. Again, compute capacity deals, data centers operate in the future, but all the things that are needed to support them, those are all based on future agreements that are not yet implemented as well.
Yeah. But I do think about that supply chain, the power supply chain, right? And then you're going to need like power to cool all these data centers. Like there's this just vicious cycle that's going to be a huge drawdown. You know, I was talking with my brothers actually this weekend about SMR, small modular reactors, in terms of nuclear. But you bring them up with anybody and they say they're 10 to 15 years out. They're, you know, I do wonder.
Sound great. We haven't seen the tech proven yet here in the U.S.
Yeah, I just wonder how we're going to power all of this. And is that going to be, or already is, a supply constraint on the AI build out?
Yeah, so one real quick thing to bring it back to Anthropic and Google and TPUs. If you are a data center builder and you're building the concrete, the tin can that it goes into, or you are a neocloud, right, like CoreWeave or some of the other neoclouds, right now it's a one or the other situation. Everyone wants to use NVIDIA chips that do exist. So you have a choice. You cannot do both. There isn't the electricity for both. So right now, everyone's very focused on prioritizing that NVIDIA capacity. When we break a story like this that's based on a deal for TPUs, the supply chain reads that story and goes, oh, I don't have electricity for that yet. You know, that's literally the reaction that we've had to our reporting. And so, yeah, I don't know what's going to happen.
All right, TBD, as we say a lot here when it comes to the AI build out and spend. Hey, well, another story related to Google, and it really plays into something. We're going to catch up with the mayor of Chattanooga, Tennessee.
Cool.
They've been building out a quantum network in partnership with some other companies. But there is a story also out involving Google running an algorithm on its Willow quantum computing chip that can be repeated on similar platforms and outperform classical computers. It is said to be a breakthrough. What do we need to know about this?
Yeah, what you need to know is that when the news broke in that moment, Alphabet shares had paired their notable decline, and in that moment jumped back up 2%. So the market took it quickly. Quantum computing is a different technology to accelerated or supercomputing. The underlying code base is completely different. One is quantum mechanics, the other is just ones and zeros, right? But the main point that Google evidenced with this chip is that the performance of the quantum computer is 13,000 times that of a supercomputer. And the reason that milestone moves us forward is you can start to say, okay, we've proven a scientific theory that this technology can be used in this use case, and it can do so better than the existing technology that we have in the real world today. That's the story, and it moved the needle in that moment.
But useful applications of quantum technology within 5 years. So
what would a useful application of quantum tech be, Ed?
So basically, you would want to run simulation or just an infinite number of mathematical calculations to run scenarios on, like, for example, drugs, right?
Yeah, like, so I was thinking healthcare, right? Yeah.
Yeah, so if you take the process of bringing a drug to market beyond human study, the best way to simulate for every single possible outcome is to do it mathematically, billions and billions of parameters, and that actually takes time. Like, we're talking, it's not instantaneous, but the quantum computer can do that, calculate beyond the parameters of the supercomputer.
All right, we told you there's a lot to get to. We are speaking with Ed Ludlow. He's the co-host of Bloomberg Tech, 11 at Wall Street time on Bloomberg Television. Meta Platforms, Ed.
Yeah.
This was, I think, surprising for a lot of people to read today. Cutting approximately 600 jobs from the company's AI unit, the Meta Superintelligence Lab. It's aiming to move quickly in the competitive AI race. How should investors read this? Because Alexander Wang, who's the head of AI over at Meta, he says, hey, this is a good thing. We can now make decisions more quickly.
Sounds like a manager. Sorry.
He's a very wealthy manager.
I don't know if our managers are listening, but
sorry, not our managers, other managers.
The argument that Meta makes is that having fewer people involved in the process results in quicker decisions. Mark Zuckerberg has always had this idea that under the structure of Meta, there is a group of, I think he said, like 25 to 30 people under him. They all constantly talk with each other and get stuff done. Each knows what's happening in each side of the business. But to Tim's point on why this was surprising, the headlines for most of this year have been about Meta paying hundreds of millions of dollars in comp to bring in floods of talent from other tech companies. So they're saying both. We are cutting some of that team that we grew aggressively and spent a lot of money on, but they believe that there were just too many people and that having a streamlined approach in this AI team will result in them shipping product, basically.
I gotta say, I do like streamlined management. I'm not gonna argue with that. It's kind of, I like being direct and knowing who to go to and get an answer really quickly, which is what we have here. Let's talk about earnings. Netflix last night and Tesla after the close today. What do we need to know about Netflix now that it's 24 hours later? And then what are you watching out for Tesla?
Yeah, so Netflix, clearly investors are spooked by an accounting issue. There was a tax dispute that Netflix had for a prior financial year with Brazil that impacted financials. But the bigger picture story for Netflix has been that they've been able to generate really impressive free cash flow while also having a really strong content slate. The business model for streaming that's always been in question is if content is king and you need the best content to win, how can you do that profitably? And so the stock's down 9%, at one point down the most since April of 2022. But actually, a lot of the street are cheering their ability to do just that, have amazing shows and content with more to come, but still have really impressive traditional financial metrics, which Netflix has been calling on Wall Street for a really long time to say, judge us by these, not by subscriber count.
Okay, we only have 2 minutes left. I wanted to do more on Netflix, but we should hit Tesla because that is reporting after the bell today. We got some good numbers from Tesla of late, record deliveries. So that we know that as of now. What's the big question that you have about these numbers that are going to hit right at 4?
Yeah, it's really simple. There's the short term and long term. In the quarter gone, they did almost 500,000 EV deliveries. We know that a lot of that was consumers rushing to buy a Tesla before the federal tax credit went away. Now, on November 6th, investors will vote on Elon Musk's compensation package. And one of the goals that the board has set him, which is mandatory, is to deliver 20 million vehicles over the 10-year period of the agreement. I am not brilliant at math, but to do 20 million vehicles over 10 years, Tesla is going to have to do on average 500,000 a quarter. If that quarter just gone was an anomaly, it was high because of people rushing to take advantage of a credit that's no longer there, can they explain to us how they will achieve that over the next 10 years, even though, of course, they'll tell us that AI and robotics is their focus?
It is Elon we're talking about. You know
how I know Ed has been living in the U.S. for a long time? He just said math instead of maths.
What?
When did you switch?
When my wife stopped dinging me on saying route instead of route.
There it is.
What's that thing we
welcome, Ed. Welcome.
Wait, Ed, what's that thing we take to go from floor number 1 to floor 42? The 42nd floor.
The elevator. Elevator. You meant that right? Yeah.
Oh, that didn't sound right. No.
Yeah.
All right, don't lose it. All right, Ed Ludlow, around the world of the big, massive world that is technology. Covered it all. So appreciate it. And we're going to be talking to Ed a little bit later on, too, once Tesla reports. All right, folks, that is Bloomberg Tech co-host Ed Ludlow. Catch him and Caroline Hyde, 11 a.m. Wall Street time, Monday through Friday. All right, we're going to stay on the tech universe. Another area that's getting a lot of attention, robotics. Can I do that?
You can. I don't know. You just did.
We've got Amazon's chief technologist, Brady, back with us. So many questions we have to ask him. This is Bloomberg.
2:21 on Wall Street. I'm Alexis Christoforous. A momentum trade unwind on Wall Street. Mega caps leading the sell-off right now. A report saying the Trump administration is weighing restrictions on software exports to China, just adding to those lingering worries about U.S.-China trade relations. The Dow is down 348 points, a loss of 0.7%. The S&P 500 down 55. The NASDAQ off 337, a loss of 1.5%. NASDAQ 100 also down now 1.5%. Tesla in the spotlight, earnings due after the close. Analysts expecting a decrease in adjusted earnings from the previous year. Despite record vehicle sales, Tesla is also recalling about 13,000 EVs over an issue that can cause a sudden loss of battery power, increasing the risk of a crash. Ahead of those earnings, Tesla down 2%. Shares of Arcturus Therapeutics, one of the biggest losers on the NASDAQ today. That's after the biotech's experimental mRNA therapy for cystic fibrosis showed no improvement in patients. Arcturus also disclosing a serious adverse event occurred in one patient. That stock down now 53%. And shares of Apple coming under pressure today after its iPhone Air was met with tepid demand in China. Nikkei reporting Apple drastically cut its iPhone Air production orders while boosting orders for the iPhone 17. Shares of Apple down 2.25%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back over to Carol and Tim.
All right, Alexis, thanks so much. Well, Bloomberg's Thomas Black, he recently wrote an opinion piece, and he talked about the hype around humanoid robots being pretty high, with forecasts of nearly 1 billion humanoids in service by 2050. But the reality is that most people overestimate what robots can do at this point in their development. Gotta say, though, one company that's been using robots a lot and for a long time and has deployed its 1 millionth robot happens to be one of the world's largest market cap companies out there. It's also a household name. So we wanted to check in once again with Ty Brady. He is chief technologist at Amazon Robotics. He joins us from Amazon's Delivering the Future 2025 event from Amazon's DUR3. It's a delivery station in Milpitas, California. And so we kind of want to find out where they are in terms of the world of robotics. Ty, I got to tell you, Tim and I loved talking to you last time, so glad to check in with you again. First of all, this event where you are, I mean, right now I just see a curtain, but I'm assuming there's lots of stuff happening at the event. Who's there? What's going on? Tell us a little bit about it.
Yep. Well, first of all, thank you so much for having me on. I really appreciate it. And I enjoyed our conversation as well. It's just great to be here. We are at our fourth Delivering the Future event here. And there's a bunch of press that we have here. And we made a couple of big announcements in robotics today.
Can you tell us about them?
The first is in our manipulation robot that we call Blue Jay. And what Blue Jay, the way that you can think of that is that you can take 3 assembly lines and put it in the same footprint of 1. What it does is help eliminate the menial, the mundane, and the repetitive. And it could pick more than 75% of the inventory that we actually sell in our sortable network, which is a really big deal. I'm really proud of that. And I'll also say there's just something interesting about Blue Jay as well, as compared to our other bird manipulation systems, Cardinal, Sparrow, and Robin. It took us about 3 years to kind of design, deploy, and get out to our frontline employees. We have actually done Blue Jay with the power of AI in just over a year. So it's really had accelerated the pace of innovation.
I think when a lot of people think about Amazon and robots, I just want to jump in because we don't have a ton of time, but we'll get to some of the other announcements. They think about the Kiva Systems robots, the big acquisition at the time, 2012. That was a big acquisition for Amazon, and they've seen pictures of the way that those can move large loads of things across warehouses. But if you were to go into a state-of-the-art Amazon warehouse today, what would you see that's in addition to those Kiva robots?
Yeah, in addition to the world's first goods-to-person fulfillment strategy, which was just a really good idea, where we have more than 1 million robots that we manufacture actually in Massachusetts doing that job every day, you're going to see more of the unstructured fields, right? So you're going to see green robot that we call Proteus that can move big cargoes of packages to the right dock at the right time. You're going to see many more manipulation systems that we have in there, eliminating kind of the repetitive motions that we have. No one wants to lift a 50-pound box all day. Robin does that. Cardinal does that, moving it into some of these Proteus-bound carts that we have, you're going to see much more collaborative robotics, right? So that's where we build our robotic systems to enable people to augment what people are capable of. And we really believe in the philosophy of people and machines working together. How can we build the tool set that enables our employees to do their job not only more efficiently, but also with better safety in mind?
All right, so there's this robot arm called Blue Jay. You just talked about it. You know, you guys are using this AI agent called Illuna. And then you're also working with augmented reality glasses to be worn by drivers in delivery trucks in the field. There's like so much going on. Step back for a moment, because you guys have a lot of data. You look at what you're doing. I'm just curious, investors who are thinking about Amazon and what you are doing, how do they think about the long-term like ROI, return on investment, when it comes to the investments you guys make in robots? Is the goal about labor efficiency, throughput speed, or is it margin expansion, kind of tie across your fulfillment operations? What is it?
Yeah, well, definitely efficiency. We think about efficiencies and how can we gain efficiency through all the chain of our fulfillment processes, for sure. And you mentioned data, and data is the fuel for AI systems. Data has allowed us to bring, think of the body of being our robotics, but bring the mind to robotics, allowing it to be more adaptable, more fluid. You can almost think of this as the ability to pour our robotic systems into any size building, any scale of building, to amplify what our employees are already doing. We want to give them an amazing tool set. And we see that when we do that, we're more productive, right? When you do robotics right, when you do collaborative robotics where you need both people and machines doing what they do best, and they do different things better, that it allows you to be more productive. And when you're more productive, that allows you to invest more in people. We've upskilled more than 700,000 of our employees, which is a great stat. And also in our robotics, we've expanded from the Kiva days, we've expanded from just a movement solution to now movement and mobility and sortation and storage and perception systems, packing systems that have really changed the game for our customers. That's a big deal to us.
But Ty, you know, will you need less workers? And I got to bring it up. You know, the Times had a story out. They talked about interviews and a cache of internal strategy documents that they saw, that it reveals that your execs think that the company's on the cusp of its next big workplace shift. I'm reading from the Times, and replacing more than 500,000 jobs with robots. So, you know, we know things change. I'm not in a horse and buggy anymore. I don't make things piecemeal. I get it. I don't get tons of faxes, and I don't get tons of pieces of physical mail. Thank God. Things change. Having said that, do you guys believe that you're on the cusp of a workplace shift and that you won't need as many workers because the advancements in robotics?
Well, there's no doubt that things change. I mean, and we're actually really proud of that at Amazon, is that we avoid stasis at all costs. We change and we adapt, and the nature of tasks definitely changes. And there's no doubt about that. We are laser focused on efficiencies inside of our buildings. But when it comes to that article was speculating 10 years out. Right, that's a 10-year speculation, and it's hard to say what's going to happen in the next 10 years. But I can tell you what happened in the last 10 years. The last 10 years, which is when we seriously invested in robotics, that we created hundreds of thousands of new jobs and new job types. And there's been no employer in the United States that has employed more people than Amazon. In 10 years. I mean, that's the power of efficiencies and building your robots in a way that's applied and real, that actually augments the human potential.
All right, my brother say I'm like a dog with a bone. So wait, so does that mean 10 years out, it could be less jobs, or we just don't know, or you don't think that's the case?
Well, you have to think about, I mean, there's jobs and there's tasks, right? So of course, we're changing the nature of tasks. Like, I'm very bullish on eliminating every menial, mundane, and repetitive job out there. Nobody wants to do that. So we're going to change those tasks 100%. But we can, again, as history has shown, we continue to create jobs, right? With the goal of two things. Can you have it all? Can you be more productive, which means more efficiency, and can you also create a safer environment for our employees? And we're actually doing both. That's what history has shown in the last 10 years. We have better than 30% reduction in our overall recordable injury rate. over the last 5 years because of our robotics, and also much more efficient. For example, our latest generation fulfillment center in Shreveport is 25% more efficient. The order. So you can have it all, but you have to build your robotics in the right way that empowers people.
We're speaking with Ty Brady, Chief Technologist at Amazon Robotics. When we think about hiring for these one-off or seasonal events like the holiday season or Amazon Prime Day, I'm wondering how you're putting pencil to paper right now and thinking about those numbers, and to what extent automation has reduced Amazon's dependency on seasonal or hourly labor for holidays, for Prime Day. What does that look like, or what will that look like this year, next year?
Well, it's the same philosophy of empowering employees, whether they're temporary or they're full-time employees, with the world's best machines that help them do their job. It's the same philosophy. I'm really proud of the fact that this year we're going to offer more than 250,000 temporary jobs for our employees to come in during the holiday season. Those are good-paying jobs. I'm really happy about that. Really pleased with that, and I'm really pleased with the work that our women and men have done in the robotics field, designing and pioneering these new physical AI systems that help them do their jobs better.
I got to say, one thing that I've been thinking a lot about is what's going on overseas, whether it's China, whether it's Japan. Bloomberg has done some reporting about service industries in Japan because they have a labor shortage, that they are leaning increasingly on robotics. Have you been over there and looking at what they're doing? And I'm just curious if you're seeing some things that are pretty impressive, and that the U.S. as a creator of things, or its role in the robotics industry, has to keep a watch on what's going on in other countries.
Yeah, I think it's easy, especially in robotics, to get distracted about what other people are doing. I think anybody can make a YouTube video. I think anybody can kind of pop in and overflate something. But if you come into our world is all about application. Our world is the reality.
All right, we were talking with Ty Brady, Chief Technologist, Robotics at Amazon. Of course, our shot froze. That's the world of technology. We're talking a lot about technology. Stuff happens, and we're hoping we can get Ty back just to finish up this conversation.
Maybe the robots are using all the Wi-Fi.
Or robots like, I don't like what it is.
That is a connectivity thing, though.
Well, it feeds into the right. Like it's all
a question about resources.
You got to charge these puppies, right?
Do.
Can't just plug them in, right? If they're, I don't know.
Hey, we need recharging too. Okay.
Yeah, it's called food and sleep.
Yeah.
For Tim, it's called food, and sleep.
I will say.
Do we have Ty back? Can we grab him for 20 seconds? Ty, 20 seconds. Forgive us. Your final thoughts here.
Sorry about that.
No, it's okay.
Okay, let it go. I'm ready for you.
Okay, 20 seconds. Just final thoughts for our audience, because we got to run.
So final thoughts is that robotics, when done the right way, when you reframe your relationship with machines, you can enable more productivity, create greater efficiencies, and create a more safer environment for employees. And this collaborative mindset that we've done for the last 10 years really does make the day.
Ty Brady over at Amazon. So appreciate it.
$240 on Wall Street. I'm Alexis Christoforous. Stocks under pressure on renewed concerns about U.S.-China trade relations. Reuters reporting that the White House is weighing curbs on exports to China made with U.S. software. The sources reportedly say the plan is just one of the options being considered and might not happen. Even so, we've got the Dow Industrials down 374 points, the S&P 500 down 54, the NASDAQ now off 325 points, a loss there of 1.4%. Texas Instruments leading the sell-off in chip stocks today after weaker than expected quarterly results. The company's fourth quarter earnings forecast was soft as well. Shares of Texas Instruments now down 7.6%. That's leading other chip stocks lower as well. AMD down 4.5%. We've got Micron Technology off more than 3%. AT&T says it added more mobile phone and home internet subscribers than analysts expected last quarter, but some pricey mobile promotions to win over new customers weighed on revenue. As a result, shares of AT&T down 2.4%. And the New York Giants have a new co-owner. Billionaire philanthropist Julia Koch and her family now own a 10% stake in the NFL team, valuing the New York Giants at $10.3 billion. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Back over to Carol and Tim.
All right, so appreciated. Alexis Christoforous in for Charlie Pellet. Just pulling up on my Bloomberg, taking a look at shares of Hilton Worldwide. Stock's been up as much as 5% today, right now with a gain of 3.5%. It is among the top gainers in the S&P 500. The stock rallying after the company boosted the lower end of its full-year outlook for expanding its hotel network. Our next guest, Tim, also a big operator in the hospitality space.
We've got back with us Alan Fuerstman, founder, chairman, and CEO of Montage International. It's home to 15 luxury hotels and resorts. It also spans residences, golf courses, and clubs, all under the Montage and Pendry names. Based in Laguna Beach, Alan joins us here into the studio. Welcome. How are you?
I'm terrific. It's great to be here. Thank you.
How is business? We've been spending a lot of time on the road. Things are packed. Things are crowded. It seems like the high end is doing very, very well.
It has. The luxury segment in general has, we read it's up 3-4% over last year. We're actually up double that, about 8% over previous year, and tremendous interest in luxury products, especially ours.
Who's your customer?
It varies from property to property. At the resorts, it's people coming for leisure. We do high-end meetings as well.
Global customers?
Globally, yeah. More North America based, but we a fair amount of international travel as well.
How much is business versus fun? Not that business isn't fun.
It varies by season and time of year. So in some of the properties, Hawaii, for example, it's almost all leisure. Other properties, we do much more on the meeting side of it. So it can vary. It could be as much as 50% each. And in other properties, it skews more on the individual traveler.
Have you seen the demographic shift since over the last year, basically, since President Trump took office for the second term? Somewhat of a crackdown on immigration, but we've seen, to a certain extent, international travel from Canada fall a little bit. Got some numbers here in New York, too. Is that affecting you at all?
Not really. We've heard some anecdotal stories here and there. A group may have been planning on coming, but no, we really have not felt that. And when we look at it quantitatively, we're actually up. And we look at our group booking pace, which is the best leading indicator for the future. We look into next year right now, and we're ahead of previous years. So all good indications, but we rely less on international travel than some of the other brands based on where our hotels are located.
What about demographics in terms of age of the people who are coming to the resorts? Is it full of people in their 40s and 50s now?
Yeah, we've always had an active clientele, and there's a youthfulness to that. But we also see a lot of multi-generational travel, the tradition. So
grandparents bringing everybody.
Grandparents bring 3 generations.
Okay,
so it's really great to see.
I am curious, too, about just the administration, some of the policies, how it's maybe impacted labor costs, food costs, building costs, because these are things certainly that we talk about a lot when we look at some of the inflationary pressures that we've seen in our economy.
Yeah, we read about it. Haven't really had the impact today in the operating costs yet.
Even labor costs? And you're finding all the workers you want?
Well, labor costs have gone up. That's been a challenge, market to market.
Yeah.
But that's been happening for the last few years.
Right. So it continues. It hasn't gone away.
It continues. It has not stopped.
Does the pushback on immigration make it even more tricky?
No. Fortunately, we've been able to attract the cream of the crop, it seems to be. Okay. But we keep an eye towards the challenge of finding great associates. I mean, it's the essence of who we are as a company.
But in all parts of the resorts, I'm talking kitchen, housekeeping, still no issue with talent and labor there?
It's market to market. Some markets, there's a real scarcity. And
where is that scarce?
Some of the seasonal resorts. So we rely on H-2B visas, J-1s to support, to bring in where we have to fill gaps. Seasonality is the biggest challenge.
Will you still rely on those visas with the new restrictions coming into play?
The restrictions that have been talked of late have been the H-1Bs.
Yeah.
We rely on H-2B, so I think we've been...
So you'll be okay?
It appears that way, and as we're gearing up for ski seasons, we have three great ski resorts. We got Montage Deer Valley, the Pendry in Park City, and then Montage Big Sky, and we've been filling out our roster there beautifully.
Well, it's interesting too because I feel like when there's a pushback by the administration against immigration, and then some of the construction and hospitality industries did reach out to the administration. So has it, do you feel like you're being heard, or go ahead?
Well, there's a concern, obviously, as new development and what the cost will be associated with building the hotels. And we have 15 hotels today, but we have another 15 that are in various stages of development. So, and some of those costs haven't been are still being put together. So there's an eye toward that, but it's unpredictable, I think, is the biggest challenge right now. We don't know exactly where it's heading.
We're talking with Alan Fuerstman. He's founder, chairman, and CEO of Montage International, luxury hotels and resorts. What are you guys building? Because you do hotels, you do resorts, you do residences, you've got golf courses, you've got clubs. Like, where's the growth for you guys?
Well, we're seeing a lot of international growth. And so, for example, in Mexico, we've got 4 new projects in development. We're opening in Mexico City, a Pendry, next year. And then the year after, we've got both a Montage and a Pendry opening in Punta Mita.
What would you say to people about, because Mexico City, as you know, can often be a target for concerns about safety. But what would you say, your experience?
My experience has been terrific. We're developing in an area of town called Roma, which is a beautiful location, very European in feel, and a market that's been underserved in luxury hotels. And I think we'll do well. Great dining scene. It's going to be a great addition and an entry for us to further into Latin America.
Tell us about a place that you've considered developing and you chose not to, and why?
Well, the opposite.
Why did you pass on it?
We pass on developing in markets where we don't think we can get the rate to support the levels of services we need to provide. And one of the biggest disconnects luxury hotel brands have, or if they put a hotel in a market that has a rate ceiling and no matter what they do, they can't get the rate, you have an inherent disconnect where either you're going to have an unhappy owner of the asset because you're not being able to get the returns you want, or you'll find those companies will reduce services commensurate with the rate they can charge. So I want to stay true to markets where I believe a luxury traveler will go.
Is there a base rate in US dollars that you have to have for a per night rate? I mean, I know it depends on where we are. It absolutely depends on where you are in the world, where you are in the country.
I mean, broadly speaking, Montage
to make it work.
Broadly speaking, Montage runs an average rate north of $1,200, $1,300 a night. So we should be able to get $1,000 plus rate for a Montage. A little less on the Pendry, but we look at those, and then there's a factor based on the labor costs and others in a particular destination or market. But we factor that into where we think the hotel is today and where we think the market will be heading.
What do you think if somebody, it's interesting, the luxury space, I was looking at some of just the stories, because there's been some concerns, certainly for some of the luxury retail space. They've been under some pressure. The Chinese consumer holding back. But it was interesting. I think it was Hermes reported this week, and I was looking at our BI team who did some analysis, and what they saw was certainly signs for an improved second half. They saw 2025 earnings per share jumping. So when you think about the luxury space, healthy, you haven't seen any signs of weakness.
We see it healthy. We look at obviously the room rate is an indicator, but also the spend on the property. How our guests are consuming our spas and how they're consuming the food and beverage in our restaurants. And we have a customer, an affluent guest that is looking for value, looking for great services, great product offering, and they'll pay for it.
What does value mean for a luxury customer?
For $1,300 a night, what does value mean?
Value means we'll exceed your expectations. You're going to come there, you'll be in an environment where you say, I'm made to feel special. The amount of people I've interacted with, their focus on my likes and dislikes, their the personal attention, the lack of the human touch is a big part of what we're offering, and that relationships that we strive to develop with our guests.
Are you talking at all or developing at all? This is going to sound weird, but developing at all for Instagram, for social media? I was just at a resort. It underwent a $30 million renovation. This part of the resort looks different than the other part of the resort. And I went to it. It's the pool. It overlooks the cliffs. I was like, this thing is made for social media. Like, they want people here taking pictures and sharing this on social media.
Yeah, as we design hotels, we look at, it does cross our mind, what a great Instagrammable spot. It used to be, where's a great photo shot? We look at that. We see how much energy it creates and its excitement. And so, yeah, that's very much a real thing. But the ability to see, one of the things that made launching a hotel company for us in this age, what helped level the playing field was the transparency that the consumer today has. They can go online and see the hotels. So a big, large conglomerate, large company can spend a lot more than we can, but we get the unfiltered, unbridled responses of real people, and that helps us.
Holiday bookings, you talked about bookings. Can you give us just a little bit more color on holiday bookings?
Very strong. The Festive this year, I was talking to our general manager from Cabo. We have a record year coming up over Festive down in Montage, Los Cabos. So again, something we're excited about. The ski destinations look real strong heading into the pre-booking period, the booking period now. So we're optimistic. Are
people booking typically giving the same amount of lead time when they book for a holiday? Are they booking later?
Well, for the holidays, they actually book earlier because we fill up. And we're actually trying to get you to rebook before you leave because the availability, it's that special. And holidays are the best for family traditions. And great resorts are the embodiment of family time over holidays. And so we target that very, very much.
Safe to say, no, you don't see any signs of a recession or a slowdown in your space. Or
we're always I'm always worried. It's fine. I wake up every day. Is there something in the world that's going to put us on tilt? But no, and I remain optimistic. I look at the signs of the performance of our hotels, and am optimistic.
So things like the rate environment or anything in terms of the build out, you're okay with it?
I don't have a choice. I mean, so we focus on delivering extraordinary service and being a differentiated product. Luxury is not a commodity, and if we can continue to perform at levels that are extraordinarily high, I think we'll be able to continue to weather economic challenges.
You told us, I don't want to blow up your spot, but you told us you actually spend a lot of time at one of the resorts. You live at one of the resorts, so you get...
I do. I live at Montage Laguna Beach, which was the first Montage we did, and I spend time virtually at all of our hotels throughout the year.
Excluding that one, which is your favorite?
It's like asking which is your favorite kid, and of course then they say, okay, which one? But no, the thing about Montage is the consistency of our product. So we have 7 Montage hotels. All 7 are 5-star hotels, and Forbes, who gives out the 5 stars, called me 2 years ago and said, "Alan, congratulations! You're the only hotel company in the world where every hotel brand, every hotel is 5 stars." And that speaks to why I can't pick a favorite, because they're amazing, and it's across the portfolio.
All right. Well, so great to get some time with you. I know it's been a couple of years, so good to check in with you. Alan Fuerstman, founder, chairman, and CEO of Montage International, joining us right here in our New York studio.
Well, shifting gears a little bit, initially appointed as interim president last year, Harvard University President Alan Garber has emerged as a champion of resistance to President Trump as the White House has directed a series of attacks against Harvard. He recently talked with Carlyle Group co-founder David Rubenstein for tonight's episode of Bloomberg TV's The David Rubenstein Show, peer-to-peer conversations. President Garber addressed many topics, including discrimination when it comes to admissions and foreign students.
We had announced in the first official communication upon the release of the Supreme Court's decision that we would adhere to the law, not change our values and principles, but we would certainly adhere to the law. The specific measures that we've taken have been many. We've made sure that in the admissions process, nobody involved in making a decision about admissions has access to the check the box, what's your race, what's your ethnicity, et cetera. So they don't have access to that information. Of course, if there's an interview in an essay, aspects of identity will come up, but we do not provide that information to the admissions officers where people identify. And I would add that we train them to make sure that they don't consider these characteristics that are prohibited from consideration through the SFFA decision.
You talked about immigrants and how the major universities have brought a lot of immigrants over, and they were great faculty members and researchers. What about getting foreign students today to American universities? Do you actually feel that foreign students are now afraid to apply because of visa problems, or they think they won't get in because there's going to be some discrimination against foreign students? How has the whole concern in Washington about foreign students and foreign faculty affected Harvard?
For many programs, there is a lot of hesitancy about attending college or attending graduate school in the U.S. because of uncertainty about visa status and whether that could be taken away. At the same time, this year, we've had a lot of success, and the students who were actually admitted virtually from other countries, virtually all of them have been able to attend. So it's too early to have a confident answer to your question, but we are worried. And I want to say one other thing. They aren't strictly speaking students, but postdocs. That is, the postdoctoral fellows who work in our labs, in the hospitals, and in other parts of the university. There is some evidence that fewer of them are applying for jobs in the U.S.
All right, that was Harvard University President Alan Garber with Carlyle Group co-founder David Rubenstein on the David Rubenstein Show, peer-to-peer conversations. It airs tonight at 9 p.m. New York time on Bloomberg Television. I will also point out in that conversation, Harvard's Alan Garber saying a larger tax on the school's endowment will hurt its ability to address problems that the U.S. government wants it to focus on. So they also dug into that. There's been a lot of issues, right? And certainly requirements or asks or demands, if you will, from the White House and the administration about what they want from large universities.
Yeah, the new tax would require some schools with the largest endowments to pay 8% of net investment returns. That's up from 1.4%. So that's a significant increase. That could result in a $300 million a year tax obligation for Harvard. He discussed the tax and other issues, as you just heard, uncertainty around visas for foreign students and the importance of having different viewpoints on campus.
All right, folks, we are headed to our last hour of trading, heading over to our TV colleagues in just a moment. Having said that, right now we're looking at a market where we are bouncing just off our lows of the session. What does that mean? We're down about 50 points on the S&P 500, a decline of 0.7 percentage point. NASDAQ 100, though, indeed the laggard here, down 1.3%, a decline of 331 points. And Tim, if you look at the S&P 500, more than 300 names to the downside today.
Yeah, crypto also in the red, a big portion of the crypto market. Bitcoin down 2.6%, Ether down 4%. You've got XRP down 4% as well.
Tesla earnings after the close. We're going to get a check on how we're doing this earnings season with Sam Stovall of CFRA. And then we're going to dig a little bit more into what mayors are up to around the country. That's all coming your way. If you're on TV, you're watching the close. Coming your way in a moment.